Good afternoon, everybody. Today is Wednesday, May 25th, 2011. And let's take a look at this market here. We had a little bit of a bounce in the S&P and the rest of the market today. But, can you trust it? To me, it looks like not necessarily. You look at that 10-minute chart, we had the big gap down on Monday, and we had a little bit of recovery today after a big gap down, and, got up to that declining 5-day moving average. If we take a look at the volume weighted average price, week to date, that is the 3-day volume weighted average price at this point, we are still above it, and we're recovering in here at what looks like an important level because we had this prior gap and we have that 100-day moving average right in here, but it's not giving us, like I said, the all clear. Yesterday, let me just get right to the punchline of the tweets that I sent out about this show. Yesterday afternoon, it looked like to me that the market was closing pretty ugly. And at the end of the day, I had just one open position, and that was CIGX. I've been trading this CIGX, as I've mentioned it a couple times on StockTwits. But I've been trading this, and I figured at the end of the day I was going to hold it. And then I changed my mind and said, I'm going to wait. I'm going to, I can buy it back tomorrow. And this is actually what I wrote in chat. This is 1:49 p.m. That's Colorado time. So I'm saying I didn't like. I was going to take the CIGX home. I didn't like. I didn't trust the market long, and I thought I couldn't find anything that really looked good on the short side. A couple of minutes later, I said, "Screw that! I'm going to sell the CIGX." So I did sell the CIGX, and I said it looks like the market could be ugly on the open. So what I decided to do at that point was to buy some Apple 330 puts, which expired on this Friday. So if we take a look at Apple, what I was thinking in there was that Apple's, first of all, Apple's in a huge uptrend on the weekly chart. That is not something I was looking for to change. What I was looking for, however, was we've been kind of getting the year-to-date volume-weighted average price in Apple is right up at about 343. So it's basically up a couple points this year, but it's really been kind of churning up here. It's not breaking down necessarily, but we do have a declining 50-day moving average, and it felt like and still feels like this market might need a little bit of a flush. And I was thinking Apple could be the good impetus that gets us, to at least test the lows for the year in Apple, or maybe even go down towards that 200-day moving average. I was hoping maybe something would go wrong with one of their products and they get recalled overnight. That's just the sick way that you think when you have short exposure to something. But the point is, on Apple, what I was looking for was the Friday puts. So they expired this Friday, and right now, what we see is, I'm sorry, I had on my chat, someone was talking about something, but on Apple, what I was looking for was hopefully a little bit of panic here on the open. And last night, so yesterday it closed, the stock closed pretty weak. It got below its volume weighted average price, and I bought the puts when they were about right there. I think I paid 170 for them or something like that. Anyways, this morning when the stock gapped open, it was getting obvious at this point that it wasn't going to break down. So I sold those puts and took a loss and took my medicine. I figured get it over with. We're probably gonna squeeze this thing a little bit higher. There was a very limited shelf life to the puts, and it was a small position, but it always sucks to come in first thing in the morning and kind of get hit in the face with with what was my only position. Especially after going to bed last night, I was looking at the futures, and I was looking at them down at 1302, thinking, hey, tomorrow's going to be, this is going to be good where the market opens. Well, at 9:30 Eastern, obviously the market had a different story to tell, and it began to recover. But again, back to the S&P 500, it's not clear to me that this market is ready to turn back higher. We've been seeing a pattern of lower highs and lower lows here over the last month and a half, and we have that declining 5-day moving average. So it's still time to be somewhat cautious in here. The good news is, though, there are still good stock setups, and like I said, though, my two best ones today were this CIGX, which is just marching higher, closed right on the highs today. And if you look at CIGX and they've got 19 million shares sold short as of May 13th, the most recent information. That number jumped by about 1.5 million or so shares from April 29th. So it can't feel too good to be any of those 19 million shares that have sold short in this stock and are still holding on. So that one, was a good stock today. And then there was this other one, Glue, which I'd seen the stock in the past, but I think it was on it was this day it must have been last Friday that someone on CNBC mentioned it. One of the guests said, Dan Niles, I think, said, we're looking at this stock as social media type thing. It was, they were talking about LinkedIn and other types of plays. Well, these guys make video games for social networks, and I think they were up today because Zynga said that they're going to go public, and that's what they do. But that's not why I bought it. I didn't figure that out till about there was maybe a half hour left in the day. But if you look at this Glue, which so it got that big volume last Friday. It consolidated on light gains, and then this morning I was telling people in chat that this one looks like it's going to get going here. It's looking good here. It was getting ready to break some highs of last Friday and had a very nice move higher. So this one also is a stock that has a big recent short position in it. Now maybe because they're a Chinese company, but February 15th there were 700,000 shares that were sold short. As of May 13th, it went to 4.2 million shares. So they added basically 3.6 million shares since February 15th. Well, if we take a look at the volume weighted average price here with this Realtick tool, which allows us to draw it from straight across from that date, we can see down in there you can see what day I have the date on. So if we just change it to the 15th, did I say 15th? Actually, it was the 13th. So the volume weighted average price in that time was at about $4 a share from February 13th through the close of business today. So if we saw the short position rise by 3.6 million shares at an average of about $4 a share, you start to see big moves like this, big percentage moves. And this was, obviously a great mover, up 21% today. And you get a couple, cigarettes and smoking cigarettes and sniffing glue like this can make up for a poorly timed bet against Apple, and as one of the most important things that traders need to, one of the most important skills or traits I think that traders have to have in order to survive and thrive is flexibility. That's something that I say often, a lot of other people do as well, because I came into the market thinking, well, last night the futures were down. It was good, and I was thinking if they open down there, maybe I can get a quick hit on those puts, and then we'll see if the market maybe finds some buyers. But obviously, the SPY we didn't get that big chance lower, at least not with Apple. In that case, Apple gapped higher, so I had the wrong vehicle. The market was weak, the stock gapped up, and I figured, well, I got to move to the sidelines. And we're not going to be right all the time. There's no one that's right all the time on their short-term, intermediate, or longer-term trades in the market. So if we realize that we're not going to be right all the time, we have to be prepared to be wrong, and we have to have a flexible mind and say, I'm going to go where the market tells me to go. I'm going to go to the stocks that make the most sense. So in the S&P 500, back to that for a moment, I still think we could maybe get a deeper, more fearful flush. The market closed weak once again today. It closed above the volume-weighted average price, but there were sellers in that last hour that were pretty steady and consistent there. And if you look at some of the you look at the Nasdaq, for instance, we're still below that 50-day moving average. So the market, all week we gap down and have been holding below that, and we're making this stair step lower in the Nasdaq. That is lower highs and lower lows. We spoke about this range that was broken, and that prior band of support in this level had acted as resistance last week. Well, we gapped lower obviously this week, and now we're still seeing that even these lows right here from last week are holding as resistance this week. And you could look at it on a 10-minute time frame and say, well, maybe that's a shoulder and that's a head and that's a shoulder, and it could be. I'm looking at this market as it really needs to prove itself more, and we're probably in a more of a day trading type of environment. I've had terrible luck with the short side. By that I mean some stocks that I was looking at this week. Monday we were looking at shorting GET. Well, that gapped lower. Then we were looking at shorting QLogic, and QLogic gapped lower. And I don't think that it makes sense, for instance, yesterday to sell short on that gap lower. There's just too much risk at that point. So I haven't been having good luck with the short side, but the long side has been better, because there's still good stocks that are setting up and presenting themselves as good opportunities, even while this market, the Nasdaq, is below its 50, below its 100-day moving average, broke this support, and again we're stair stepping lower with prior support levels holding as resistance. Now, the Nasdaq, if this market's to flush a little bit lower, I think that 150-day moving average down near 56 could be a level where we begin to stabilize a little bit. The weekly trends are still obviously higher, so deep down I want to give the benefit of the doubt to the buyers, but when we have this type of short-term action, it's very difficult to trust. We're not getting the quick like the last gap in April. We had a quick recovery and then on to highs. We're not getting a quick recovery. If we can get back above that 5-day moving average, I think we're going to see, we're getting the correction price-wise right now. I think we're still going to correct more through time as well. The Russell 2000, this market has been flirting with its 100-day moving average in this 81.5 level, basically, that this level of support broke. And encouragingly, this market did hold up above that level for now in the 100-day moving average, and but at the same time, the rally was halted right at the declining 5-day moving average. So we're not getting the all clear from these markets that it is okay to buy. The semiconductors, which obviously were the big leader and then failed to break out, they're still trying to, they stabilize here at this prior level of resistance, which is trying to hold a support at the 50-day moving average as well, at the 35 level. But a little, and we did see a test of that 100-day moving average, by the way. But I could still see this group coming down towards 34 and a half or so, and you've got to be quick or you're dead in this market. The financials have closed now 3 days below the 200-day moving average, and I think that the downside from here is probably limited in the financials. That I don't think they make a good short, especially after you look at the magnitude of the recent move. Or it's not the magnitude of it; it's down 60 cents on this most recent leg lower. But we have a market, these markets that are attempting to stabilize, and right now they're just it's too early to believe that they are in fact recovering. So what we need to do is focus on the setup. So, looking for stocks like CIGX on the long side. Apple, I tried it on the short side. It didn't agree with me, so I cut my losses right at about this point. And this is actually the chart of those options. So I'll show you that I bought them, I believe, right in here, and had a little bit of a cushion, and I got out of them, I think let me check my order book. I can't see from here, but I think 84 cents is where I got out. So right as it kind of broke, as the stock made a higher high, these options made a lower low, and I got out at 84 cents. And I could still be holding them, and they'd be worth 34 cents. So, you have to just limit your losses and move aside when the market tells you to, and that's what it told me to do. We're also looking today at a potential short sale candidate of EBIX. This is clearly in a downtrend. The weekly time frame, it looks like it could get down towards about 17 and a half, 18 bucks. I didn't short this because it gapped lower. We were strong most of the day, but if you look at the 1 and 2 minute chart, it just kind of bled lower. I think if you're short it, you put a stop probably about 1975 or just above today, probably about 1985 in there. MW, Men's Warehouse, has been a strong stock, and this is gapped up to multiple year highs here recently, I believe, on earnings, and you can see it's still got a very nice looking constructive weekly chart. So it looks like a nice bullish flag in here. So we were watching this one as a potential long candidate today, and what we were looking for was a move above either this level here. Was basically what we were looking at last night for subscribers, with a stop below this level. Well, obviously it gapped lower, but it did recover, and then what we saw happen was it was holding its volume weighted average price, and then it took out that 2-day volume weighted average price and these little highs. So we got long right in here, sold half of it here, and I actually sold the balance of what I held at break even, because there's just I don't trust this market. As good as this stock looks, it began to pull back, and if we don't fall apart tomorrow, then this will be on my radar, and I'll be looking to buy Men's Warehouse, because again, that weekly chart looks awesome. If you're an investor, it's probably worth investigating with a stop below 31.50. Now, if I'm going to get involved in it, I want to see some strength, and then maybe put my stop near 33 tomorrow. QLIK has been in a huge uptrend, and this is one that we've been watching as well. It retook a little bit, broke a little resistance 2 days ago, and we were looking to get it maybe above, I think above today's high. You can see yesterday afternoon we had a little resistance in this general 3270-ish area. Today's high was what was it? If we take a look, 3265. So maybe getting above 3265, QLIK could go, and this will prove to be the higher low that over the last 2 days might be showing this inverted head and shoulders pattern. And if I was to buy it above 3265, I would think that a stop near about 32 would be probably worst case for a swing trade. Volcano Corp, I missed this one this morning, but we were looking at it as a buy above yesterday afternoon's high. So right here, like I said, I was busy with my Apple puts and some other ones, but this was a real nice move in here today. I would say that it continues to look strong. It's up at all-time highs here, so the buyers are in control, and we've got a nice tight consolidation. This might be something to consider as well for continued strength on Thursday. Something I was mentioning yesterday to or I think it was Monday to subscribers, was that the market was showing us this weakness, and that we wanted to take a look at some of the stocks that were pulling back, but I was emphasizing that we have to wait for the stock to tell us that it's okay on multiple time frames to buy. We don't just want to buy pullbacks. So some of the examples were SQNM. SQNM looked like maybe it was going to find some support at the 10-day and then the 20-day moving average. And if you look at the weekly chart, it looks like, hey, if it could break this level in here near about $8.50 a share, you could see a pretty big move, I think, in SQNM. I haven't checked the short interest in there, but I'm going to right now. We've got about 18 million shares, and that's been, I guess, pretty steady over the last year. But this stock looks like if it could break that weekly level, you don't want to buy these highs when they're extended, but you want to wait for a pullback and then buy strength. Well, what we want to look at is, for instance, the 30-minute time frame. It would have been a good buy above this little resistance here if it had held that, held the 5-day moving average. It was on watch here. It didn't give us a reason to buy. And since then, and that was about where the 10-day moving average was, but since then we've seen a pattern of lower highs and lower lows. Well, maybe that's just starting to shift a little bit here. So I would pay attention to this one maybe tomorrow. That we see we did make a slightly lower low today, and we made a slightly higher high here today. So if this stock over the next couple of days maybe pulls back to 760 and then breaks past about 775, I think that a little squintum here could be a good move to the upside with a stop. Right now, worst case near 740. I wouldn't buy this thing tomorrow. I'd like to see a pullback and then it goes. Give that 5-day moving average a chance to kind of flatten out a little bit. We're seeing a low volume pullback, but if you're going to buy low volume pullbacks, it might just keep pulling back on light volume and pulling back the way it did back here. And then where does the big volume come? When people get thrashed out of it in that volatility. Other names that look decent, PLAB, PLAB, Photronics, and Photronics. You take a look in here. Here's a stock with a pretty decent short position, 7.7 million shares. You can see that's as high as it's been in over a year, and back in December we had only 4 million shares. So they've added 3.5 million shares since December. Can't think that feels too good. If we look at the weekly chart, we've got a nice looking weekly chart here. We've seen it stair stepping higher over the last couple of years. It's been holding some support in here. This daily chart, it's been creating this nice little flag, and we've been watching it as it pulls back, but it didn't break the resistance that we were looking for. We were looking at it just the other day to buy it in here, and I actually got involved early. I think it was right here. I made an anticipatory buy and then regretted it and sold it yesterday morning. Haven't gotten back in yet, but I think this is going to be the basis of an important higher low in PLAB near about $7.75, and if it can get back probably above this level here at 935, I think Photronics, that those shorts might be motivated to get the next round of squeeze higher. It's a perfect little bullish flag here. The weekly time frame, like I said, still has room to run, it looks like. If we take a look at the horizontal line, here's where we are. So we're working against this prior level of support from 2007, 2008, and if we can get back above it, then it looks like the next reasonable upside target would be about $11 a share. Kulik and Sofa is in the same business, I believe, as them. Good looking longer term chart, kind of setting up similar. We're getting this pullback, but it's just been pulling back. It's not creating a higher high. We've got lower highs and lower lows in a declining 5-day moving average, so there's no point in buying it yet. Maybe over the next few sessions it gets back above 1180, and then we can get some kind of confirmation move above 1210ish or so, but probably still too early in there. Brocade broke out. This is a stock that always looks good and rarely does anything, but the weekly chart looks good, and maybe Brocade is showing us a big inverted head and shoulders pattern on and I drew that horribly, but on this weekly chart, the daily time frame, we had a big volume move to the upside and it's pulling back. I don't want to buy pullbacks because they touch a 5-day moving average or whatever. I want to wait for the pattern of lower highs and lower lows to diminish, and so tomorrow maybe this is a good buy above $6.53. If we take a look at the volume weighted average price since the event, that is, since we had this large volume here, we can see that it's $6.60, or you could call the event that gap. Still about $6.55 to $6.60 would be a level to start looking at Brocade as maybe the buyers can recapture this momentum and push it on towards a bigger level on the weekly chart. I don't think Brocade has huge upside, but I know nothing about the fundamentals. Maybe there's something going on there. We spoke last week about CBB, and CBB, this is Cincinnati Bell, maybe had a good-looking weekly chart, and it was an orderly pullback, and it's still pulling back orderly, but it's still pulling back, and it's still making lower highs and lower lows, and still has a declining 5-day moving average. So you don't want to buy it until it proves itself. And in this one, I'd say probably at least $3.12 before I'd consider buying it. I could go on and on with examples like ENDP pulling back, INCY is pulling back and just keeps pulling back. At what point does it become a failure? I don't know, and really I don't care as long as I'm not in it stubbornly saying, wait a minute, what's going on? It gaps higher, and you're not going to chase a gap higher with a declining 5-day moving average unless maybe it pulls back there, stabilize, and then begins to run. Okay, so these stocks, some of them are going to fail, some of them are going to turn around. Nuance broke out, NUAN, to looks like multiple year highs, close to all-time highs. On that 30-minute time frame, we can see that maybe you would have bought it right here, but a stop would have saved you from this little mess of the last week and a half with this declining 5-day moving average. So maybe in a couple days, Nuance kind of turns itself around in here and can begin to move back higher again. Another name that I didn't trade it today just because it's just turned too stupid, is this Tesla. I've spoken a lot about Tesla, and there's a big short position in there as well, and this stock is just it's turned into so you can see the shorts have actually begun to cover their position a little bit, but they went from 6 million shares up to 15 million shares since the beginning of the year, and that's doesn't look like a good position to have. But it's the daily chart still looks okay, but you look at the intraday action, it's really been just a choppy, messy stock in here. And what do you know? I just drew an inverted head and shoulders pattern without really intending to, but it's got a lot of news on it, kind of conflicting news, I think, as well. So it's tough to trust it because it's been so damn volatile. And you look at what happened in here today. It made a run. I mean, it looks like an easy, nice day up, but it made that run from 26.80 up to 27.5, from 27.5 down to 26.25, and then it began that move. So it wasn't quite as easy as the daily candle might represent. There was some real volatility in there, and we took out the prior day's lows. We had some real volatility in there. So this is one of those stocks that kind of seems to be trading similar to like Rambus or to TiVo, or maybe not Rambus because that one completely fell apart last week, or like TiVo. It's just one of those stocks that it trades a little too stupid, and I'm looking for the nice, steady, clean moves, and this one doesn't seem like it. I've said that before though about stocks. I think it was Johnny Utah who kept asking me about Sprint and said, hey Brian, we spoke about Sprint, how it looked good over here, how it looked good I think in this area, and how it looked good here. And I said, it looked good over here as well. And I said, I don't think I'm going to trade it this time because I've gotten involved in it a few times, and it always fools me. I haven't been able to put my finger on this one, but obviously it has broken out. It's done so without me. I don't catch them all, no one does, and when I do catch them, sometimes they shake me out before they make their move. But you take a look at a stock like Sprint. This was the clean move. It broke out and has just been showing a nice steady pattern of higher highs and higher lows above that 5-day moving average. And that's what we're looking to buy is, after the buyers regain that momentum, to get involved and then to say, okay, I see the setup. Now, does the stock suit my personality? Will P-Lab suit my personality if it can get above 935? Is Squintum going to suit my personality? That's for you to decide. You're the one who makes the decisions, who sits there with the emotions that come along with investing and trading when you put your money on the line. And that's basically what trading's all about, and there's some opportunities. We're in a uh, uncertain market, but we're getting some very good action in the individual names. So I would say that focus on the action in the individual names. Maybe this glue has the potential to be the next real big momentum name. If you look at the monthly chart here, maybe it gets past this and squeezes the heck out of those shorts. They're in a good business supposedly that is getting some attention from IPOs and that sort of thing. So maybe it's a good one, or maybe it's a Chinese fraud company. We'll see. But like I said, the market is my needle and spoon, and despite all the stuff that goes on. It's the market we have, and you have to make your own decisions to decide which trades you're going to take, which ones not to trade, and when to scale back a little bit when the market's giving us uncertainty like it is here. So, anyways, that'll do it for today. Thanks for tuning in, and talk to you later in the week.